Good morning, everyone. I'm Paula, and that's Elaine right there. We're going to be showing to you just a little bit about our agency, what we do. We're located in Deerfield Beach, like Diogo said, and we pretty much do all kinds of insurance at the agency. So here's our little logo. Um, get started now. Just wanted to tell you a little bit how we started back in 2010. Reason why we picked Florida was because we were actually from Connecticut, and we both worked in insurance for over 10 years now. And it just came a time where we were working for someone else, and we thought, okay, and when we're making someone else money, especially in the insurance business, it just doesn't work. You don't make as much and you're not appreciated for what you do. So we thought, okay, there's a difference. There's a market out there for, certain clients and the way they should be treated, the way I wanted to be treated. So I thought, okay, I'm going to open my own business. And we always came to Florida on vacation since we were 16. And we thought, okay, this is the right time. I didn't have anything. Instead of opening in Connecticut, being stuck up there, let's go to Florida. And so we both actually moved to Florida the same year. Opened in 2010. I opened the business. She was working with Allstate, kept in that line. She worked for Allstate here. Um, the philosophy, like I said, I needed to, I thought, okay, I'm going to open an agency where I'm going to treat my clients as if it's my own policy. So if it's like my mother sitting across, the table from me, that's how I'm going to treat my client, as if it's someone that I really know. So here's what it says. Universal Insurance is an agency dedicated to serve our client in the best possible manner. Quality customer service and a well-informed client is our main goal. We also want to sit down with a client and get them informed on the policy that they get. So we want them to leave our office or get off the phone after they just bought their policy and know what they're getting. Because later on, it makes it easier for the client and for us as well. You know what you have. So knowing the right coverage to choose from and what each of them will do for you in case of a claim, which is the time that you most need your insurance policy, is the key to getting you protected. So that's our whole philosophy with the agency. Um, Partnerships, 2013, so 3 years went by. They say, it's the hardest in a business to survive. So if you survive the first 3 years, that's what I've heard before. So you're in good hands. 2013, luckily, the agency found Diogo, and that's when we started working together. And also, that's when Elaine came aboard and we became partners. The agency was growing. We needed more people. I thought instead of just hiring someone that I didn't know completely, Elaine, it was perfect match. And we have qualities that she has qualities that I don't have, and I have qualities that she doesn't have. So we say every day how perfect it was. So 2013 was a big year for us. Key companies that we represent, because we're an independent agency, we're not like Allstate, State Farm, where if a client comes in or if you call for with one of your clients, we're gonna have a bunch of companies to offer. So if that client comes in and they don't fit one specific company's profile, well, we can look for other companies. Not like Allstate. You're going to go in, pretty much the agent is going to treat you, okay, they're going to look out for the company's best interest. They're not going to be looking out for your best interest. And that's why I've always thought too, if I ever open a place, it will be an independent agency. Because my client is going to come in. If this company doesn't accept him, that other company will. So just to name a few companies that we represent will be Progressive, Foremost Insurance, so those are for auto. Homeowners, Universal Property and Casualty, Federated, United Healthcare for health, Humana, just to name a few. We have a bunch of companies, so there's always something. And if you ever think of insurance, we can pretty much insure anything that you can think of. So let's just move on. And line of business that we insure. So it's like I said, so we do home, we do auto, we do health, just to name a few. Life insurance, general liability. Workers' compensation, short term, that's a big one right now that's coming up. Um, I just saw a bunch of smiles. I was like, short term, that's coming up a lot now with the health reform, where health insurance, if you didn't insure during the open enrollment, there's a new policy now that's called short term medical. So that's going to come up a lot now, short term. Pet insurance, we do insure pets. So if you have a loved pet, we can insure it. Watercraft, your boat, your jet ski, everything. Special events, that's a big one too. Like Diogo just had the event here last week. We could be insuring that. But we do insure his office, so he didn't need it. His policy did cover that. Yeah, you have a bunch of policies. One of them is gonna cover, right, Diogo? Or if there's a wedding, we can do that too. So that's the special events policy. Jewelry. Because sometimes on your homeowner's policy, it does cover your jewelry, but if you have like a really big ring that it's a big value, or if you have an art, we need to, it's a scheduled policy that we can get. Motorcycles, disability, commercial property, so like Diogo's office, everything that you can think of insurance-wise, we insure an office, a business, and more. Because like I said, if you think of insurance, just you can give us a call. We pretty much insure everything. Renters insurance, yes. Homeowners insurance. So the way I wanted to present to you, because you're all realtors, so I wanted to present in a way that that you see it fit for your client. So usually going to be bringing it to us. And one of the things too that I should say too, this year, as of January, because we're growing, successfully growing, and thank you for all of that too. You're part of it. Me and Elaine decided that we needed to split, go separate ways, and we needed to have different tasks in the agency, because one person cannot know auto, home, and keep up to date with all the information and coverages. So we decided, okay, Elaine, she takes care now of all the home and auto. So if most of you are going to be talking to Elaine if you have a client for homeowners insurance. So it will be her, and then I stick now with the health and the life insurance. Commercial, we've been splitting now, but we're looking for someone who's going to take over all the commercial lines. It is a lot of work. So, and especially now with the health reform too on health, that's a big one. And so let me go over a little bit about the homeowners insurance. I think what I'm going to do here today is just go over a little bit about the homeowners, the major policies that we do in the agency, just to give you a little bit of a screenshot of. So where I'm going to explain the homeowners policy process. The whole process from once you call us and you have a client needing a quote because you're going to close. And then I'm also going to show you the coverages. Mitigation inspection, I think you might hear that a lot once you're closing with your client because of all the inspections that need to get done. Helpful to have a mitigation done at that time. So I think I just want to go over that briefly. And the benefits to you calling us and getting that insurance for your client. So homeowners declaration. Oh, actually, well, I'll just go back at the end. What I just wanted to show you here a little bit how the coverages work. Coverage A, dwelling. This is every single company. This is what they're all going to insure on your policy. So A, dwelling, $200,000 limits. Dwelling, what it means is your home, the structure of your home. That's what it covers, okay, on the dwelling part. And a little bit of a visual. If you take your house and turn it upside down, everything that sticks, like it stays there, your cabinets, everything that stays, that's part of your structure. So that's dwelling coverage. So that's the part that's going to cover it. Other structure that you can see that more up here, a shed on the back of your yard, that would be other structure. Anything that's not attached, a fence. Personal property, visual again, if you turn it upside down, everything that falls out of the home, that's personal property, your sofa, your TV, everything. Loss of use. If there is a hurricane or if a fire burns down your home and you now to reconstruct your home, you need to stay at a hotel and go to Disney. You have loss of use. This $40,000 here, this is what's going to cover your additional expense. Some companies call it additional living expense. So that's when it's constructing your home and you need another place to stay. Um, Personal liability, 300,000. That's usually the max that a company will allow a policy, 300,000. And that's if someone comes into your home and they fall, or even your mailman, he could sue you if it falls inside your property. So personal liability, that's a big one. We like to give 300,000 every single time because that's sometimes not even enough if something happens, and especially if you have more homes or whatever you have a business. But that's usually the max. A lot of companies now are lowering that to 100,000 max. So only a few companies that will do 300,000. They can get excess liability. That's a different policy, but homeowners up to 300. And that's really inexpensive too. You see, $18 a year. So when a client asks, "Oh, let me just get 100,000," just for a couple of bucks more, maybe $9 more, you can get 300,000. Medical payments the same way. If anyone falls and they need that immediate help, they use up that 3,000 for maybe ambulance or something. Actually, let me go back here real quick. Very important is the deductibles on your policy, and that's what makes a big change on your premium. So if a client or for a closing, we need to get the premium where it needs to be so that the bank will allow that loan. That's what we usually switch there, change numbers. There's usually a hurricane deductible, and it goes from 2% up to 10%. It acts the same way as an auto policy. The higher the deductible, the cheaper your premium will be. Some banks do not allow 10%, which is the max, so we usually have to lower it to 5. But if we can, if a person is looking at price, we go up to 10%. And then there's also the all other peril, all other deductibles, because sometimes, you have two deductibles in a policy, hurricane deductible, and then here 1,000 non-hurricane, so everything else. Even if there's a robbery, you have a coverage for that, and that would be the $1,000 deductible. Very important too, the dwelling coverage. That the company will determine that. It's not your client. Oh, my house is not even worth that much. I don't know up here, but down in Miami-Dade, Broward County, prices went down so much that people are saying, "Paula, but 250,000. My house, I bought it for 37,000, and why am I getting this much?" Well, companies pretty much are stuck with that within that bubble that happened. So they come up with that price. They go into public records and they pull up the home's information and they say, "Okay, we're going to insure it for this much. I can't lower it. It couldn't be more or less. It's got to be that price." And each company have their own way of calculating that amount. So we cannot change that. The only things that me and Elaine can change would be personal liability, medical, and deductibles. Nothing here. Everything else is a percentage of the dwelling amount. So there's no way to change it. Actually, some companies, I take that back. Some companies do allow us, the client, to change it to whatever they want. But they need an appraisal from a licensed contractor to say this is how much it would take to rebuild the home. Then they will look at it. They might change it or not. So that's a big one. We get a lot of that question. Why am I insuring for more than the house is worth? Wind mitigation inspection. Like I said, I don't know if you hear that a lot, but once your closing's coming up and you need to get the inspections done on a home, the appraisal, it is helpful to get a wind mitigation inspection done together with all the inspections because we need it. All the insurance companies need a wind mitigation inspection. And the benefit to a client, it's because the wind mitigation, and you're going to see on a next slide here, actually, this one. Wind mitigation inspection, if you have one done and if the home is built according to it's a hurricane-proof home, they can get up to 45% of the original premium. So if they have, if your home, you get an inspection done and your home has all the protections that they think if a hurricane comes by and it doesn't blow up your house, hurricane-proof home, then you can get up to almost 50% discount on your policy. Yeah, go ahead. At the end. It's right here, what they call a hurricane-proof building. These are the things that they're going to look for on a wind mitigation inspection. They're going to want to know how strong is your roof covering, your doors. So your doors, all your openings. So all your windows, all your doors, they need to be protected some way or the other. Either they're hurricane-proof windows or there's a panel or something. And that's every single opening. If there's one door or one window that's not covered and everything else is, you don't get the discount. So that's how the insurance company is going to look at it. Because if the wind comes, if there's a hurricane, they come through that one little opening, it could be a little square. The wind is going to come in and it's going to blow up the house. It's going to blow everything up. So they're going to want to know that everything is protected. Roof to wall connection, those are like nails, the nail size, it's a whole science behind it. If I explain, it'll be here the whole day. Opening protections, roof shape, they look at the shape, bracing and gable end. That's the geometry of your roof. Roof deck attachment, how is the structure of your roof attached to the wall of the home. The purpose of a wind mitigation inspection is to determine the appropriateness of a given structure's construction in the event of a hurricane. So if a hurricane comes by, how strong is your home? Is it hurricane-proof? Is it a hurricane-proof building? I just gave a few examples here of how these are the most important things that you look for in a mitigation inspection that we look for. First one is your roof FBC equivalent. It's up there. Most of the homes built 2002 on. Most cases here in Orlando, pretty much own your homes, right? So I don't think you have to worry about that. They're all FBC equivalent. That's a very good discount that they get on the policy. Clips or single wraps. This is what we usually find in a single home. Clips or single wraps. Single wraps is the better one. This is the attachment of your roof structure to the walls. So single wraps, that's better than clips. You get a bigger discount. And this is the opening protection chart. You see here, usually they mark it an X, all the windows or doors that are not covered. So there are 15 that are not covered in this example. Garage door, they actually just started looking at garages now. In your county, they don't require that your garage is hurricane proof, but now in Miami-Dade and in Broward, they're required to have the garage doors secured as well. So I'm thinking eventually they're going to do that up here. So this is just a little example of a mitigation inspection. Now moving on to automobile. Actually, going back to the homeowners process, how we do it. You're going to call us, and what we usually do, right, Elaine? She is going to take down, it all depends on you. How much of a hands-on do you want us to be? Or do you rather take care of everything for your client? So you let us know up front, because we'll do all the work. We'll take the client's name, phone number, email, and we can contact your client for some questions, because we don't even like to bother the client that much, because we know that their attention is, I want to get that home, I want to get that closed and just move in. And we know that your attention as well is selling the home, getting the home sold. So we don't want to bother you that much either. We know all the process that's going on. We try to do most of it ourselves, calling the bank. Okay, we get all the information from the bank, or we get the address from you at first, and we're gonna go into Google. We look it up. That's one of the exceptions from our agency too. I like to do every single homeowners that I do. I like to see what I'm insuring. I don't like to just go all blind, and so we go into public records. We find everything online that we can. If we have an appraisal, that's very helpful. So if you have an appraisal, when you call us, just email that to us. That's all we need. And tell us, okay, Paula, you can contact my caller. Let me do that. Because then we can email you a quote back to you, or we can email it to the client. It all depends. Because from the time that we give out a quote, we're just gonna want to, there are those little things. Let's move, change the deductible or not. So those are the things that we like to talk to a client and see what they would like and explain the coverage that they have. So that's one of the things that we like to do. And our quoting system, that goes for auto, that goes for health, that goes for everything that we do in the agency. Since we have so many companies, we're only going to call the client back with the best 3 quotes or the best 4 quotes max. Sometimes it's only one. Hey, this is the best coverage that. So the client needs to trust us that we are looking out for their best interest, and we really do. So we're always going to call back with the best quote, and then give you the options to change around the deductibles and all that. So that is the process. So you can rest assured that we're trying to do the best that we can. If we call you, it's because we really need that information. We couldn't find it online, so we're gonna call you. Automobile. So I'm just gonna go over to a little coverage on the auto part. Auto process, it's pretty much the same. Like I said, we'll get the information from the client or from you. Usually auto, we need to get it from the client because we need that VIN number and all that. We need to know if they have a prior insurance to get the additional discount, and the benefits to insure with us. Benefits with everything else too that we do in the agency, and I would say that's an added bonus to your client for you to be sending your client to us. What we do every six months or at the time of renewal, we're gonna quote that client around. As soon as we get the renewal, your client get it 2 months prior to renewal, so they get the renewal offer. We a month prior, because we cannot be quoted in a system 30 days ahead of us. So 30 days before, that's when we look at all our policies that are going to renew, and we quote them around again. And if we can find a better price, we're going to call your client and say, hey, we found something better. So here's the option. I don't think a lot of companies do that. Or I would say if you go with Geico, I don't think they do that for you. They catch you at first, and then they raise the prices later. They get their money back at renewal time. And we're always quoting around. We're always shopping to see if there's a better company. I want to get contracted with that company. I want that company for my agency. That's the other thing too. The agencies that the companies that we represent at Universal Insurance, they are only the best in my eyes. If there's a company that, for example, there's this one homeowner company, they have really good prices, but that's how they get their client. They have really good price, but once you put in a claim, and we have a personal friend that had to put in a claim with that certain company. It was a big claim. His deductible, because you always got to pay up the deductible first, or that's the amount that you need to pay after everything is paid. The company is going to send you a check minus your deductible. This one company, their premiums are very low, but the reason is once you put in a claim, if you don't send in that check for your deductible, our personal friend, his personal check was, I think, $28,000 because he needed to redo almost his whole home because of a one little leak, water problem. It soaked his whole house. Everything needed to be redone, reconstructed. He needed to send a $28,000 check to the company before they started the claim process. So why would you want a company like that? We do not represent companies like that. It's cheaper. Go ahead if you want something cheap now, but if you need it, it's pretty much not going to be there for you unless you have 28,000 sitting at the bank or whatever deductible you need. So we do not represent companies like that. We're constantly looking for companies that are good quality companies. Those are the only ones that we represent. So moving on to automobile, here's an example of a declaration page, and we actually go over all this with our clients. They're getting their policy. Some people, we don't, good thing we don't have a lot of those clients that are just looking for a price, because that's not the best way to go. Because if you're gonna, I would think that if you're paying something every month, then you should get something back from it when you need it. So Florida State, the minimum coverage for auto is 1020, and you're required to have that PIP insurance. You never want to use PIP insurance. You need to have it because it's required. If you don't need to call in a claim for PIP, meaning call a lawyer, like they have lawyer referral, call us, we'll give you 10,000. You do not get 10,000 first of all, because the lawyer is going to get bulk of that money. Then your doctor needs to get paid, usually a chiropractor. You might get 3,000 out of that. Your policy, good luck to you, because it's going to go up so much in price at renewal time if your company doesn't cancel you and now you need to go shopping around for another company, and it's so hard to find an insurance company that picks up a client with a PIP claim. One little clip PIP claim. So you never want to use that coverage, by the way. And that's why you have health insurance. So go to your health insurance, get treatment you need. Don't go looking for PIP insurance, $10,000 thing. It's not worth it. Liability, like I said, we usually try to tell our clients if it's a single person with an auto, it is good to have 25,000 for property damage. That's a good coverage to start with. I wouldn't go any lower. And how this breaks down is bodily injury, the 2550. 25 is for if you get into an accident, you're at fault, it's your fault. So that other car in front of you, let's say it's a dream property Mercedes. Well, it's not an inexpensive car. So if there's one person inside that vehicle that needs to go to the hospital, and I've noticed in Florida, everyone needs to go to the hospital. Even if you sideswipe that car and one little scratch, oh, they got the pain. So if there's one person inside that car, 25,000. That's your limit that they're gonna cover. And a hospital bill, it's more than that. And if if they get a lawyer, they're not going to go for 25,000. They're going to go for way more. So that's why I say this is a minimum that I think a person should have. So if there's one person, it's 25,000. If there's two or more inside that vehicle that needs to go to a hospital, that's the 50. That's what it's for. So if you look at the minimum Florida standards 1020, that's what it means. $10,000, 20,000, two or more people inside that vehicle. Imagine 1020. I don't know. That doesn't do anything. That might be one chiropractor visit nowadays. 25,000 property damage. That's that vehicle. That's how much they're going to cover for that vehicle. If there's a total loss, and I would think if it's a Mercedes or any car nowadays too, it's more than 25,000. Or if you hit a property, so that's that property, a pole. If you hit a pole, it's very expensive. My mom, she hit a pole once. That was sad because the pole came down on her car and almost got her. It was right in the middle of the car. That was a big bill for the insurance company. Thank God she had 100, 300, and so they covered everything. But that pole pulled down 3 other poles. So it's expensive, especially when you're talking about city bill. So they need to send the electrical people. They need to send everyone. So those are good coverages. The PIP insurance, this is what it is. Usually this is like one of the most expensive premiums on a policy, but it's required. There's actually a law now in the state trying to take that out. Because people don't, all it does is it brings business to all these lawyers, chiropractors, exactly, and you will not get that 10,000. Uninsured motorist. This is very important. You do not need to have, the state doesn't say a person needs to have, but uninsured motorist, that's your coverage and who's in your vehicle with you. So I would think that if you're paying whatever you're paying a month for someone else, why wouldn't you pay for yourself and your passengers? Most people have kids. Why wouldn't you have that coverage for yourself? Because the same way I explained to that coverage 2550, this is 2550 for your vehicle. If it's only you in a vehicle, 25. If it's two or more, 50,000. So I would think that this is a very important coverage to have. Pay yourself first before you pay someone else. So think about that one. A lot of people don't like to have that. Comprehensive collision, rental, roadside assistance, that's what we call full coverage. Do you need full coverage? We usually ask that on the phone. That's what we mean. Do you need coverage for your vehicle if something happens? So comprehensive, that's if there's a hurricane and your car is parked and something happens to it, comprehensive coverage will cover it. Collision. So your car is in movement and something happens, this is the part that's going to cover it. I like to give 1,000, the higher deductible, the cheaper it is a month. And the reason why I like to give 1,000 too, you don't want to be calling your insurance for every single scratch on your car. Because again, insurance companies are in it for the money. So if they cover one little thing on your policy, if you put in a claim, that claim is going to be on your record for the shortest amount that I know. It's Progressive, right? 36 months that they're going to be looking for a claim. And your premium is going to go up for 36 months. So if you call in one little claim, 36 months, you know they're going to be paying for that. And it's not worth it. Unless, that's why we usually like to have our clients give us a call, let us know, unless it's like midnight, yeah, call the insurance company and try to get it resolved, but get the claim going. But give us a call if it's not something major. We're going to ask the client to get an estimate first. If it is something like, okay, I need to fix my car, $4,800 to fix it, yeah, put in a claim. It's $1,000 deductible. If you don't have that money, then it's worth it. But if it's like $1,500 to get it repaired and you have $1,000 deductible, even if you had a $500 deductible, I would tell the client, do you have $1,500? I would rather use that $1,500 so you don't have to pay up later, because you're going to pay that later. Rental reimbursement, a lot of people ask that too. Hey, I'm going to go to Disney and I want a car, or I want to get a rental. This is only if you crash your car, only if it's in an accident. Then you have the rental. And like here, $40 each day, so you're not going to get a very nice car. We just had a client too that something happened, you know. He drives a Jaguar, like the top Jaguar, and he wanted to get a rental. I said, well, you have $50 a day. I don't think you're going to be driving a Jaguar. So he said, if I were you, because it is a lease car, I said, well, I know a Jaguar will give you one of their vehicles if you get it done in their shop. So don't even use your insurance because you're not going to get a nice car. He's like, oh, okay, yes. He doesn't like to drive other cars. And it's only up to 30 days. So you have $40 a day for 30 days. Roadside assistance, it's really cheap, $5 per, this is a 6-month policy. Most companies now only insure for 6 months anyways on auto. They used to do a year-long policy, but it's not even good. You don't want that because you want to be shopping around every 6 months like we do at the agency. We shop around every single renewal time. Okay, so next is health insurance. That's a big topic right now. Just gonna tell about health reform, what happened. Everything that you used to know. I clicked on something wrong, I think. Is it this one? Okay. I knew I clicked on something wrong. Everything that we knew, even I, about health insurance last year, Go, yeah, down the drain. And even insurance system, their system is totally out of, they need to updating really bad. Everyone, can you imagine how many people got insurance now? And these companies are not used to this. They did not hire extra people. So everything is taking a month and a half later than what it used to take a week or two. So it's really crazy right now. Um, Very good thing, Obamacare for low and low income people. Very good thing. I have clients that are getting the best insurance policy, no deductible policy for 35 cents a month because the government is giving them a credit of I don't know how much. $490 a month. So, and these are people like this lady. She could never afford a policy, and she does have pre-existing conditions. She needs to get so many treatments done that she didn't know what she was gonna do. Now she has it. She called me the other day so happy. She's like, Paula, I'm so happy I have health insurance. Can I start using it because it's May 1st? And I said yes. And she's like, hey, I paid the whole year's premium. She was so happy because she called them, she made the payment for the whole year. So she was extremely happy. I'm happy for that. Everyone else that's complaining, so who makes money? And I understand the middle class in this country, it's awful. You're not getting any credit from the government, and the price is doubled in price. And one good thing too that happened with the health reform, most companies before you pay that price every month for health insurance, but once you went to the doctor, most of your exams that your doctor asked for, any blood work, it wasn't covered. So a lot of the treatments, companies wouldn't cover anything. And if you had a pre-existing, you couldn't get coverage. So what happens to those people? Um, Now, pre-existing is covered. If you wanted to have a baby, you needed to add that onto your health insurance policy 15 months before. The premium went up at least $150 a month more. And you needed to oh, I'm going to have a baby 2 years from now, and you started paying for it. And most of the exams too would not be covered, and we still have to pay out of pocket. So that's why this whole health reform was good too, for those reasons. Because now a lot of the things that were not covered before, now they are. And I would say that's a good thing. The other thing too, there's a basic coverage that the government said every single company needs to have that. The people who had insurance before, the government did allow, and they just extended that to 2016, the end of 2016, that they can keep their policy and keep renewing that policy, even though it doesn't have that much coverage, but the price is still a little bit better than the newer policies now. Um, Open enrollment, that's a new thing too. Anybody could just come in and now, let's say today, and call us and say, Paula, I want health insurance. You can't do that anymore because now the government is stipulated either you go privately or you go Obamacare, or you can only get coverage during the open enrollment. The open enrollment that they stipulated for last year, this year's policy, it started October 1st. A lot of people didn't know about that because the whole confusion, I guess it didn't market that too much because I still have people calling today and saying, hey, I want to get that Obamacare done because it was from October 1st last year until March 31st this year. So it's over, done. Um, the next open enrollment if you want to get a policy for 2015, all policies now start from January 1st to December 31st. All policies, all companies. Any state you go, that's how it is. So if you want, the next open enrollment for next year is November 15th to February 15th. And if you have a policy now and you want to change your plan, only during open enrollment. What happens if you have someone outside of open enrollment? If you have someone that just moved from a different state, or if they moved from Brazil, we can get them because there's a special enrollment there's a special event that people can still enroll in the health insurance. That's the only time when they can get it any time of the year. if they have a special qualifying event. Moving from a different state or different country, if they're legal. Most companies now require a social. I have my ways around it. Uh, just to let you know. And as long as they're legal in a country, I can get them something. Um, if they get married, if they can get into a policy midterm, mid-year, they don't need to wait for open enrollment. If they lose their job where they had health insurance before, they can get insurance. So there are still a few things that people can get insurance outside open enrollment. But most of it, open enrollment, that's it. That's when you can make changes. If people didn't feel like they wanted to get a health insurance now this year, you're starting this year, they need to pay a fee. So when time comes to do your income tax next year for 2014, they're going to pay $95 or 1% of their adjusted gross income. Not a lot, so a lot of people chose to pay the fee this year, but it's going to increase every other year. Next year is going to increase that amount, the fee. The other thing too, that because that happened and people cannot get health insurance, there's another policy that insurance companies are coming out with, short-term, that I said in the beginning. There's a short-term medical that they can get. It acts like a health insurance plan, but it doesn't have your office visits. One of those, I can get a short term that you can get 2 office visits within the time that you get that short term. People that are calling me now, I would sell them a 9-month policy to go up to December 31st. But they only get 2 visits to December 31st, so that's not a lot. If you have a family, you need more than 2 office visits. But the other thing that I just found out too, a little trick, you can get a short term, cancel that policy within a month, and now you can get into enrolling a health insurance. You qualify now for an open enrollment. So those are little tricks that we can do, and you can get health insurance. I'm going to go over on the next screen the coverage options and the short term. That's what I just said now. HMO and PPO, that's usually the first thing that I explain to people. That's every single company. You're going to get that asked. Do you want an HMO policy or a PPO policy? My opinion, PPO is the best one to go. It is more expensive. PPO, why is it the best? You need to go to a dermatologist. I don't need to go to my primary doctor to get a referral to say, hey, now you can go to your dermatologist. I just go to my dermatologist. Or if you feel something in your heart, you go to a cardiologist. If you feel something in your stomach, go to a gastroenterologist doctor. HMO policy, you always need to go to your primary doctor. So you pay that copay, go to your primary. He's going to examine you. And then you get a referral to go to your other doctor, to a specialist. And now you pay another copay and you go to your specialist. Every single time you need to do that. That's why it's cheaper too. But PPO, you go to whatever place you want. Healthcare options, just go over real quick. The most important things to look at, I think there are 4 things. Is it HMO or PPO? What would you like? That's what I usually go over with my clients. And I usually like to give 4 options. Here you have 4 options. The next thing to look at is your deductible. The same with your auto and the same with your home. The higher the deductible, the cheaper your price will be. This one is cheaper because your deductible is $63.50. That's the most a deductible can go up to nowadays. Used to be $12,000, $10,000. They changed that to the government. If it's a single family home, that's what the single and family means. Sometimes you see that they're family or single. Let's say this plan right here. Deductible $1,000. This would be the best plan for a person to get. The lower the deductible, the better. But you know you're going to be paying more. Co-insurance, that's the next thing you should be looking at. 80%, that means that the next 20, you need to pay. So if you're going to a hospital and it's a $100,000 bill, You know that the first 1,000 you need to pay, so you're gonna get that 1,000 bill after everything else is paid. But from that 99,000, you still have 20% of that bill because of that 80/20. If it's 100, then you know you pay this, there's nothing else for you to pay. But usually what companies are doing now too, the lower the deductible, they stop offering the 100 co-insurance because then they want you to pay some of it. But the nice thing too, okay, so hey, I have 20% of 99,000. That's a lot of money. Well, there's a maximum out of pocket that the company is gonna tell you to pay. If it's a single person policy, then this policy would be 1,500. So after that 1,000 that you're required to pay, that 20% cannot be more than an additional 500. So this is nice. Always look for the maximum out of pocket. So always look for HMO PPO, deductible, co-insurance, maximum out of pocket. Those are the most important things on a policy, health insurance policy. And your copay visits. This is always nice too. If you see NA, you always need to pay your deductible first. So everything that you do, there's no NA here, but imagine if it was an NA here for copay, and your deductible is 6,300. Every single doctor visit that you go to, you're gonna be paying out of your pocket until you reach the 6,300. Then the company starts paying for everything because you have 100% co-insurance. But I mean, that's a catastrophic policy. Yeah, I don't think you want that. You could get a high deductible and still have the copay. So, right here, here's an example. This policy, there's a high deductible, $35 for your primary doctor, deductible co-insurance specialty. That means if you need to go to a specialist, you're paying up to that deductible amount because it doesn't have a copay. So if you don't see a copay, you know you're paying your deductible first. So that's it with this policy. And then just a little brief into life insurance. At the agency, I don't sell what I don't believe in, so I do not sell whole life. So I've had clients, yeah, if a client comes in, I'll send them somewhere else, or you can look for another. I don't believe in that. How to calculate, and I'll explain it. It's not gonna do it won't do you any favor getting a whole life policy. I just had a client call me and he does have a whole policy. A whole life policy, universal policy, it would match actually if I sold the universal policy, right? But you have this cash value in your account. So you have an investment and you have a life insurance. You have two things built into one. If you die, you're only getting paid one thing. So your family pretty much needs to choose which one am I going to get paid on. So you paid your whole life this high premium every month. And then because you want your family to be covered and taken care of once you die, now they have to choose one or the other. And I don't think that's fair. That's how these big insurance companies are making their money, because you're paying a high premium every month where you could be doing yourself a favor, paying way less, or taking that whole, let's say $500 that you're paying into a built-in whole life, buy a term policy. You can get a lot more on term. You could get $1 million instead of getting $500,000 on a whole life. So now you have $1 million life term. And there's a whole thing behind it too. There's another reason. And then you can invest that other money, invest the rest of your money into a different policy. Now, if you do die, they get both. So I would say that's the best thing. There's how to calculate the right amount too, and that's important. A lot of people, they think, oh, I want $1 million policy because $1 million sounds nice. And you need to stop and think, because sometimes for a person, $1 million might be too much money every month. And then that's when you start getting questions. Oh, why does this person pay less? And why did, well, there's a whole thing behind it. Your age, your health, where you live, the risk, the greater risk of you dying in certain areas where you live. So that's why one person might pay more than the next. How do you calculate? You need to think about a 30-year policy, for example. Um, do I still have a mortgage to pay? Because that is the reason why you want to leave money behind for your family. For, let's say, the next 30 years, if you're 30 years old, for the next 30 years, I think I'll have paid my mortgage already. So I can leave my family with a paid off house. What else do they need? Well, I have, so you calculate that into how much is my mortgage now? So you calculate that. So let's say you have another 250 to pay. Okay, get a 250. You have a car that you're paying, or there's a school. How much is the college gonna cost for my kids? So those are the things that you calculate how much money you really need, and that's the policy, term policy that you're gonna be looking for. You don't need to get $1 million. Well, you can get $1 million if you like to. But usually you do that calculation. You see how much you have, how much you're going to need within that 30 year. And because within that 30 year, you're going to have things paid off. And you took that money that you saved from the whole life to a term, you're investing that money. So you're investing that money for 30 years. Once you retire, now you have all that money to use while you're alive. Everything is paid off. Now you have money that you invested for 30 years, and using that money, I don't think you need to leave anything else because you're all set. You have that money that you already invested. Uh, Whole life, if you take money out, there's a penalty that you pay. It's pretty much like borrowing money from you. So you pay fees to the insurance company, and it's your money. You've been putting that money into it. Um, Here's the example a little bit that I found. If a person they have 150,000 policy, husband and wife. This is how much they're paying a month, 298. And the cash value at 65, once they turn 65, is 52,000. That investment in the whole life policy. If you buy a term, they can actually get 300,000 each. So now that's already doubled in here. And they're paying 124 a month instead of 298. Take that money, the rest of it, invest at a 10% rate. At 65, look how much money they have. And now they can start using that money too. So that's my whole thought in term. You should look into it too. That's why I don't sell whole life. I don't believe in it. And that's pretty much it. Now you can here's our website, free universal quotes, and I'll go over it now to the website. And you can ask questions now if you have any. Here's our website. Oh yeah, we can do that too. On the website here, you can always, if we're not available, you can always go to get a quote, and look, there's a list. And click on one of them just to see it. There's a short form, so you don't have to put a lot of information in if you don't have a lot of info. And that goes straight, once you send it, on the bottom there, submit form, it goes straight to our email. We get it right away. And sometimes even if we're not in the office, we'll check. At least we'll call in, hey, I got your request, and we're working on it. There's a bunch of things there. We have our Facebook page too. Like us there. So do you guys have any questions?
I would like to know about the wind mitigation inspection, about the insurance premium for homeowners insurance. You said that this inspection could give 45% of original premium discount. And when you talk about that, what should be the age of the house to need that?
Okay, so when it comes down to getting the discount for the wind mitigation, it's not based on the age. It's based how the house was built in an impact of a hurricane. So if your house was built very strong and you get discounts, sometimes, so basically there's different discounts. You could get a discount for the shape of the roof, how the roof is attached to the house if you have hurricane windows. Sometimes a house could be built 2002. Yes, you are going to get some credits as FBC equivalents, which means that the roof was built to the codes, but you might not even get any other credits because maybe the house were not built strong enough. It was built very poorly, so it means that they just did toenails, the size of the nails. So not every house they get a lot of credit. So it's based how the house was constructed. So
You know, those metal, I forget what they're called, that connect the wood to there's different kind, yeah. Yeah, the wrap, that's the wrap.
yeah,
That was it there. Like
And
eight
what
nails
about
each
new
side.
new houses?
usually new houses, you get a discount. A lot of, especially Orlando, a lot of houses in Orlando, they have a hip roof, and you do get FBC equivalent because it's built before 2002. And then there is another discount, basically how the roof is attached to the house. If it's single wraps, it's a great discount. 2005, usually all windows and doors have to be hurricane proofed. So when we get an inspection, it all depends. Um, it all depends. Somehow, yes, 2002 prior you get FBC equivalent. A older home, you could get a lot of discounts. Depends if they did an upgrade to get the hurricane protected windows and doors. Depending the roof of the shape of the roof, you also get a big discount. So when we look at wind mitigation, each house is different. So
A brand new house, how is treated?
a usually a brand new house, you get the FBC equivalent. So yes, you do get that discount, and depending of the builder, it all depends of the builder too. Because if it's the windows and doors, everything's hurricane proof, you get the opening protection, and usually it should be built strong enough for a hurricane. So you should get a lot of discounts.
Usually where they get the most discounts is either the roof, but that you're not gonna take out your whole roof because it's not just the tiles or the shingles that you gotta take out and put a new one. You gotta redo the whole thing from the here on up. So one of the things that we usually tell our clients, if you don't have the opening protection discount, that's the bulk of the discounts too. That's one thing that they can change easily. Get hurricane windows or hurricane doors, or if you don't want to spend that much money, put in panels. And that's an easy change so that they can get discounts. That I don't know if a new construction will have hurricane windows. And I think that's a homeowners, they buy it, they need to get that done. I don't know. Does that answer your question? Yeah? Okay. Anyone else?
This is where you're laying. Do you guys cover homeowners insurance in a different state, like for example Texas, or
We only come in Florida.
only Florida?
Yeah, just in Florida.
Just in Florida. Life insurance. Life insurance. Do you guys have to take like physical exam on the client?
Yeah, Paulo will answer that question.
Life insurance, we have a few companies that if a client needs to get it right away, they need it within 2 days. I had a client like that the other day. She's like, I need $1 million because I'm going to Brazil. It's like, why do you need $1 million? Something happening? Is something happening?
Red flag.
Yeah, she's like, I have 2 kids here. I don't know if it was her first time going. She needed it done. She called me Thursday. She needed it done by, she's like, I'm traveling Sunday. I was like, okay, we can get a policy like that. And we have companies that if they need to, she couldn't get an exam done. So we have companies that will insure without an exam. But most companies, and if you want to get a big policy, you do need an exam. But they can come to your house, they can come to your work, they can come to you.
Is that a blood exam or something like this? No, that's what you said.
Okay, if they need a blood exam, yes, they do need to get that done. Any other questions?
Renter's insurance, is it the owner buys the policy, the renter buys the policy? Who buys the policy?
The renter's insurance, if you're asking if the owners buy the policy or the rent, it depends. I mean, if I own the house and it's in a contract that you're required to have a renter's policy, then you have to get the policy upon yourself. Or sometimes if I want to protect myself in the liability, I might pay the policy for you, but I'm not going to pay for your belongings, which is going to be a percentage in the policy included, but I'm going to buy the 300,000 liability just to protect myself. So it all depends. You could get on yourself or the owner of the house.
Do you guys work with the Geico?
No,
No Geico?
no. Geico is exclusive.
We can get you a 10-minute
Any other questions?
But it's an investor, and you have the property insurance. Are you required to have renter's insurance within that policy?
Renter's insurance is for you if you're renting and you want to protect your things that you brought to this house. It's for you. I don't think I've ever heard of an owner getting renter's insurance for their.
But the policy,
They have homeowners insurance.
homeowner's insurance would
Yeah.
cover.
They're covering their structure.
Yeah.
Their
that's
structure
not
is
covering
fine, yeah.
people that are renting from.
But
Also
sometimes,
the personal, but I've seen policies where it's crazy.
yeah, but sometimes like the owner too, they will, because a renter's policy is very cheap. It could be $150. So basically, a renter's policy covers the personal property and liability. And then if I own the house, then I have the liability too. But then, I'm renting my house to you, and then you have a guest that comes and fall out of this there. He's gonna sue me. So instead of going to my policy first, I'm gonna use your policy. That's another case. It's very rare, So I'm just buying a renters for her, not for her, personal stuff. I don't care about that.
Yeah.
I'm protecting myself for the liability exposure. So instead of using my homeowner's policy, I'm gonna use the HO4. But most cases, yes, most cases the owner doesn't really buy the policy. Most cases you buy it for yourself too, not because you wanna. Something happens, you wanna protect your furniture, everything you have in the house.